Welcome to Thought Leaders, featuring interviews with some of the best minds in the industry. Today's special guest is popular platform speaker and syndicated financial columnist, Ike Devji. Hello everyone, I'm Steve Savant, syndicated financial columnist and talk show host. In this segment, we're talking about 3 lines of defense in a real asset protection plan, all from Ike's articles and contributions to Optimum Financial Health, the Doctor's Essential Wealth Management and Preservation book. Well, Ike, welcome to our show. And
Thank you, Steve.
I've been in the insurance business for 30 years. And when I first talked to you, our first time we interviewed you, I was thinking, whatever Ike's talking about, asset protection, is not what I'm talking about. There's such a gulf between normal financial advisors who prep for, I thought my umbrella policy was enough. I thought my errors and omissions policy was enough. And you brought me into a whole new world of asset protection, especially for high-end clients like physicians, attorneys. That brought me into a whole new area that I never even considered.
Yes, it is a multi-layered process, and we do use, in the legal world, in the financial world, I find that we're using some of the same terms, identical terms, but often have very different understandings of what those terms mean. And then you and I, maybe as across the fence as a financial advisor and an attorney, when we're talking to our clients, they have yet a third interpretation. And it's important that we all get on the same page to make these things work the way they should.
Well, let's talk about, you have a kind of a 3-layered defense posture, and I love this basic graph that we have here. And why don't you walk us through what the mechanics are when you're thinking about it as it's laid out?
You bet, Steve. Well, asset protection is a combination of things, as you and I have discussed in the past. And unfortunately, it can't just be one thing that you have in a box or that I have in a box and that we can provide as one piece. It is a system of layers that protects clients, whether we're talking about, as you said, a physician or a high net worth business owner or some other affluent individual that your advisors are charged with caring for. And so when we look at the sort of pyramid, it is the opposite of what many people think, and it's especially the opposite of, unfortunately, what most lawyers are telling people and presenting to them in their sales presentations on asset protection. The first part of asset protection is what we euphemistically refer to as clean living. That means policies, procedures, enforcement, compliance that I have in my industry and that you folks certainly have in yours, and making sure that all of those things are done right the first time as the first line of defense of keeping us out of harm's way. The second layer of asset protection is what I refer to as a liability insurance program. And I use the word program to help myself and advisors and most importantly the clients understand that it unfortunately just isn't about buying that one policy. As much as I insist that everybody has an umbrella policy, I think I'm equally adamant in warning them that the umbrella policy on its own is inadequate. And we can talk about that in some more detail. But, you know, an insurance program means a system of all of the layers of the right kinds of specialty insurance that I need, that you need, that your clients need. And it unfortunately goes far beyond just an umbrella. If the first 2 layers are breached or fail or there's a gap, then we talk about the legal tools, which is what I'm responsible for as an attorney. But I think when we're talking about asset protection, whether from my perspective or the perspective of a financial advisor, the important thing is to know that we should be using that as the last line of defense, not the first line of defense. So when I teach on asset protection all over the country, as you mentioned, we talk about risk management and compliance and insurance in many cases before we ever talk about a single trust or partnership or anything else. And it's a very fact-specific question as well. So if you and I came on here today and had an in-depth discussion about a specific kind of asset protection trust, which I do all the time, it would be a little bit disingenuous to apply that to a wide group of people with vastly different risk pictures and financial circumstances. So we've got to start basic before we can get that focus.
And you see differences in different vocations to apply different types of language in the trust.
Absolutely. Absolutely. We structure things depending on who we're talking to, what their risk level is. Is it a general risk level? Are there specific risk levels that, like professional liability? Is it product liability that we're worried about? Are we worried about assets that many clients would feel are safe, like real estate, which actually also in many cases produce a significant amount of liability, right? If you own an apartment complex, you better be worried about what happens to your tenants. So again, we'd be looking at what have we done in these layers to keep that business owner safe and to keep their other assets segregated from the thing that produces the liability.
Now, as you know, Ike, a lot of my audience is financial advisors and insurance professionals.
Absolutely.
So we're geared already to thinking in terms of we're going into a business, we're looking at maybe disability buyout, we're looking at life buyout, but we're not on the other side of the equation that you're talking about. I always thought that was relegated to the property casualty agent, and that's his job.
You know, in many cases it is, but when we're talking to really sophisticated advisors, folks like CFPs, or financial advisors that regularly deal with high net worth clients, business owners, executives, whatever that, a target ideal high net worth demographic is, we are finding that those kinds of clients have a higher expectation of the knowledge level of their advisor. They expect you to be a solution provider. And let's not forget that every well-versed advisor out there kind of has the same group of products and the same sales pitch on those products. And the question in many cases that makes an advisor better or more attractive or stickier is, what did he tell me that I didn't know that helped me with something that I was worried about? And this is something we talk about all the time. Are we having the conversations that we want to have as professionals, or are we having the conversations that our clients need? And we find that the advisors who understand these things and present them to their clients do a better job at attracting, serving, and retaining high net worth business owners, because this is really what's out there threatening them.
Well, for more information on how these 3 lines of defense in a real asset protection can be used in your practice and how to expand your practice, just click on the landing page address in the video description. We'll be right back with more from Ike Devji.
A solid web presence has never been more important to the success of your business. Introducing Agent Website Creator, provided by CreativeOne. Through Agent Website Creator, you can create your own personalized website and have it up and running easily with zero knowledge of programming. Choose from several designs with easy drag and drop customization. Get proven lead generation offers, professionally written articles, and helpful financial calculators. Plus, the ability to embed videos, integrate your social media, and more. Update your website anytime and show the world within minutes. The best part? It's hosted for free. To learn more about Agent Website Creator, call your CreativeOne sales team at 800-992-2642 or visit us online at creativeone.com.
In this segment, we're talking about expanding your understanding of risk management and asset protection, all from Ike's articles and contributions to Optimum Financial Health, the Doctor's Essential Wealth Management and Preservation Handbook. We're talking again, and as I said in my first segment, Ike, honestly, before I met you, I thought I knew what I was doing. And I also punted and gave the authority for other people to look at this asset protection to the property casualty area. But I hear you saying, especially in that first segment, this could be a differentiator for my practice. If I understood this and what you're doing and partnered with a person at your level, I'm going to be able to bring in something that nobody else is bringing in.
I couldn't agree with you more, Steve. I mean, when you think about how many advisors out there, no matter how good they are at, let's say, the life insurance or annuity business or the financial advisory business, are adding value in the way that we're talking about by addressing the real risks that could negatively affect their clients' wealth. It's great that I came to you for financial advice, but if you have a wider scope in your view of my business and my finances, that's going to make you as an advisor substantially more valuable and attractive to me as a client. There may also be some liability issues involved for folks who have advanced certifications like our CFP folks, right? We know that from a professional liability standpoint, those folks have a duty to inquire about things like tax planning and estate planning and other things like that. And in the legal world, we have seen some authority that would indicate that CFPs who have not addressed wealth preservation and asset protection planning may be professionally deficient and incur some liability as well. Now, every CFP out there or advanced degree or certification advisor will have their own opinion on this, so I can only speak from my position as an attorney, but we've certainly heard those rumblings. We also hear with much greater frequency that advisors who are actually P&C agents or who have been involved in the P&C coverage for their clients, who have left big gaps in the coverage, have direct personal professional liability for that as well. So it's good for you, it's good for your clients, it adds value to the relationships, and it helps protect the money that your clients have charged you with managing for them in many cases, right? I mean, they come to a financial advisor not just because they don't know what stock to pick. They come with many questions, from budgets to tax planning to lots of preservation questions.
Well, I'm thinking with the exception of maybe life insurance and disability, we're mostly on the offensive side. We're trying to build assets. We're trying to take care of our 401k retirement plans. We're doing key person insurance, things of that nature. But we're not going in where you're talking about. And even with our advisors that are watching the show right now, they're probably sitting there going, well, I have an umbrella policy because I do consultant work. I have an errors and omissions policy that goes up to $3 million aggregate for a claim. I didn't know. Do I need more than that?
Well, that's a great question, and it's a question that both advisors and clients don't seem to have ever been given good, clear answers to, like you and I are trying to do today. You know, the umbrella policies that we talk about, if we're talking about on the consumer side, most of those policies cover only the client's home and automobile and any related exposure, unless they have a separate and very specific commercial liability policy that will cover business-related risks. So, for instance, if we have a client that has a substantial exposure at her business and faces an employee lawsuit, would her personal liability umbrella that she might have been smart enough to get for $3 million kick in to cover her at work? And the answer is no. Right? So we find that in many cases, either clients and advisors are underinsured, or they're wearing the emperor's new clothes, or they think, I've got an umbrella policy, what's the worst that could happen? Or nothing can happen, or I'm covered. When in fact, what most people don't get is that those umbrella policies cover things really related to their basic home and auto policies to increase limits with a very specific list of exclusions and limitations, right? So you go out and get into a suit with your business partners, that personal umbrella policy on your home and auto is of zero value on that issue. So yes, it's a vital first line of defense, or one of them, but on its own, it leaves a lot of big gaps that we're going to explore together.
Okay, so when I'm thinking about my umbrella policy, I'm thinking, oh, well, that's maybe just my personal. There are umbrella policies specific to our industry as advisors that have to be commercial, and they have to be actually written that way for our practice protection.
That's correct. And even there are a number of areas of very specialized insurance that cover things like employee lawsuits or data breach or directors and officers liability, things that you and I are going to get into in a future discussion, that even with the higher increased limits under that commercial policy, would still need to be separately covered.
Well, for more information on Ike's risk management and asset protection and how to use this in your practice, just click on the landing page address in the video description. And for more information on our shows, seminars, and workshops, just follow us on social media or visit us out on our website. I'm Steve Savant. We'll see you next time on Thought Leaders. And remember, keep thinking outside the box.